Your bank is paying you about 0.39% on your savings. That is the national average right now. On $10,000, that is $39 a year. High-yield savings accounts are paying in the 3% to 5% range right now, and the best high-yield savings account 2026 options are stronger than ever. Same $10,000 earns $300 to $500. Over 10 years, the difference in interest can be close to $5,000 for doing nothing except moving your money to the right account. A high-yield savings account is just a savings account that pays significantly more interest than a regular bank account while keeping your money just as safe, FDIC insured, up to $250,000 per depositor per bank, same as any traditional bank. Big banks like Chase and Bank of America usually pay almost nothing because they carry the cost of thousands of branches and ATMs. Online banks have far less overhead. They pass that savings directly to you as a higher rate. So where to keep emergency fund money in 2026? In almost every case, a high-yield savings account. Not the stock market, too volatile for money you might need next month. Not a CD, you lock your money up and pay a penalty if you need it early. An emergency fund needs to be safe, easy to get to, and actually earning something while it sits there. A high-yield savings account checks all three. You can transfer money out in 1 to 3 business days, and instead of earning $39 a year on $10,000, you are earning $300 to $500. Here are some of the best high-yield savings options in March 2026 based on verified current rates. Always check the APY directly with the bank before opening. These rates move when the Fed moves. Varo is paying up to 5.00% APY on balances up to $5,000 when you meet their requirements, including qualifying direct deposits. Above that cap, the rate drops, but it is still well above the national average. Axos Bank, through its Axos One bundle, can pay up to 4.21% APY on savings when you meet the direct deposit and balance requirements with no monthly maintenance fees. VO Bank is at 4.03% APY with minimal requirements, just $100 to open, no monthly fees, and no conditions beyond that. NerdWallet rates it the highest APY, available among banks, with low minimums and no hoops. Newtek Bank has been one of the top-rated accounts at around 4.20% APY, with no minimum deposit and no monthly fees. It consistently shows up near the top of best rate lists, but as of early March 2026, it is not accepting new applications due to overwhelming demand. Worth checking their site for availability. SoFi is at up to about 4.00% APY for members who set up qualifying direct deposits, with no monthly fees on their savings account. Barclays is at about 3.50% APY on its online savings, with no minimum to open and no monthly fee. One of the most established online banks, and no conditions to meet beyond opening the account. Marcus by Goldman Sachs is around 3.65% APY, with no minimum deposit and no monthly fees, and often runs limited time bonus offers on top of the base rate. Ally Bank is at about 3.20% APY, slightly lower than the top options, but one of the best-known online banks, with no monthly fees, a $1 minimum, and excellent tools for organizing your savings into different goals. All of these are FDIC insured. These are variable rates. They adjust when the Federal Reserve moves. The Fed held rates steady at its January 2026 meeting, and the next decision is scheduled for March 18th. While rates are still this strong, putting your emergency fund into a high-yield savings account lets it at least keep pace with the world around it. How much should you keep in an emergency fund? 3 to 6 months of essential expenses, rent or mortgage, utilities, groceries, transportation, minimum debt payments, not subscriptions, not dining out, the number that keeps your life running if your income stopped tomorrow. For most people, that is somewhere between $8,000 and $20,000. At $15,000, earning around 4.20%, You collect about $630 a year just for having your emergency fund in the right place. At the national average, you would earn closer to $60. Same money, very different result. 2 things before you open one. Keep your emergency fund separate from your checking account. A different bank with a 1 to 3 day transfer delay builds just enough friction to protect it from impulse spending, while still being there when you truly need it. The interest is taxable. A high-yield savings account is not a retirement account. The bank will send you a tax form if your interest is above the reporting threshold, and the IRS taxes that interest as regular income. It is still absolutely worth earning hundreds in interest instead of tens. Just know that a portion goes to taxes each year. Your emergency fund exists to protect you. Put it somewhere that actually pays you to be prepared. None of this is financial advice. Rates change frequently. Always verify current APYs directly with the bank before opening an account. FDIC insurance covers up to $250,000 per depositor per insured institution. Talk to a licensed financial professional for advice specific to your situation. Subscribe for more videos on how money actually works and how to make it work for you. See you next time.